Another Trade Your Way video. In this video I'm going to break down the 764 strategy and give you 3 entry points to allow you to trade the 764 strategy up, in this case, to the 764, to the 76.4 key fib. So let's have a look. Okay, so step 1, or entry point, first entry point, possible entry point. If we want to see the trend change and this wash and rinse being respected, then we don't want to see an MT strategy in play. So an MT strategy would be going with the trend to the downside, so literally entering short of the 38.2. So at this point we're looking for either a long or a short, depending on what it does at this key level, 38.2. If it hits this area, double top, and then breaks on down, we would look for a retracement and then to go short with MT, and we'd look for the fib levels to the downside. If, however, it breaks this area, our entry point long would be around 1820 or just above 1820, and we would then look for a T1 being somewhere like the 50% or the 61.8. Ultimately, T2 would always be around the 76.4, but just shy of the 76.4. So in this case, would look for 1852 as a target. My stop loss would be about 100 pips really from my entry, which is generally how I trade gold. It needs to be swung trade because it is so much bigger. So let's see what's going on there. So 1810 it should have been. There we go. There we go. So it would look like that, and we would look for a break of this area, and then we would get in long, and we would generally tuck our stop in below all of this price action. So this is our first entry point. So this is step 1. Look for the entry long. If it breaks that level, then we go long. If it a double top here, but it has to touch 38.2 and then sell off. If it hits that level, then we go with the MT strategy. So right now it's trying to break up, so we're looking to get in on this. So we get in on that pullback. It's hit our T1 if your T1 was a 50%. If your T1 is a 61.8, then you would continue to look for that, but you would also then manage your stop loss by now, and move your stop loss to break even, and that would then safeguard this whole trade. Let's just make sure that is still the same because I moved it. But yeah, 18 and then 1820 as an entry point. Sorry, as a stop loss. Yeah, just for argument's sake. Yeah, that's all good. And so then we would just trail our stop loss. So you could just trail this stop loss to bring your stop loss perhaps up to the 50% if you've taken some profit and you just want to lock in the rest of this move, especially at the 61.8. So that's your first area where you'd be looking to go long here. Get in here. Step 2 would be, if you miss that one, would be to do something like this, and then to look for an entry around the 50%, and then T1 would be 61.8. Your stop loss could be just something like this, for example, just below the last swing low. Still, of course, still looking for that 61, the 76.4. So ideally you could just put it up there like that to get it up there. But I think I've just used 52. I just remember because I took this trade long, my exit point was at 52, just to be safe, because I had some other confluences up there. So that's step 1. Step 2, get in there or get in here. What if you miss all of this and you want to take the long? So I did. I got in at 1842 and took this up to the 76.4 still. So that was still a valid trade, and this is exactly what I did here. If we just allow price action to play out, and you can see what it's doing. It's going sideways. So I've given you a couple of entry points here at the 38.2. I've given you another entry point at that 50, especially on this pullback as confirmation. So buying this dip would have been a perfect entry to take it to the 61.8 as your T1. And then obviously we've had all of this price action, which if you've got your stop down here, you probably wouldn't be stopped out if your stop was at break even. what's it going to do next? Well, here I've got my target, because this was a trade that I did actually take. So let's show you exactly what happens. This is entry point 3. So 3 entry points for this 764 strategy. 3 chances to make some money going long on this using the 764 strategy, because people often ask me, where do I get in on the 764? And we say, well, a break of the 38.2 ideally. And also, when you look at the awesome oscillator, that starts to give us some bullish momentum. That started quite early on here because it's a smaller time frame. It's a 1 hour chart, but you can see it's above the 0 line, so that's a positive, and that's a confluence that we look for, trading above the 0 line. So that's in our favour. So, it's dithering a little bit, but then we pull back here and, it's consolidating. And with the news, it helped us to eventually get in. You see, note my stop loss was here, just below this price action, just below all of this last swing. Again, with the market trending, we can trail our stop loss. So that is, in effect, our first decent bit of trading to the 764. Now, what do we do once we've got to that 764? Or what if you hadn't taken any of that or taken any profit off the 764? Well, in this case, you could then look for a short off the 764. And this was another trade that we started taking. We saw we got in several times shorting it, and then we basically have been shorting this all the way back down to the 1760s off this area. So that was our potential to get in long to the 764. Three entry points, possible entry points. Obviously, the sooner you get in, the bigger the reward potentially in terms of risk to reward. But again, you can still get in on these moves. And here, that was a nice, sweet 100 pip move up straight to our target. Hit the 764, bounced off, and now you can see a deep rejection on the 1 hour. So that's telling us that potentially this looks like it wants to change direction. So that's a rejection candle. Allow it to go up, allow it to put in some form of a retracement of this range, maybe something like a 38.2 or 50%, because at the end of the day, we're going to be looking for momentum to see a continuation short. If it goes to 764, we definitely want to be paying attention to that and looking for further downside, because we've got the 764 in play. So if you've gotten in here to go short, brilliant. That was a quick move down, perfect price action. Let's see what happens. Let's see for the next phase of this 764 strategy. So we've been biased to the upside, and we've made our money going long several times. And we had 3 opportunities to get in, 3 structured entry points. So step by step, how to get in, here, here, and here. Now, with this break, with this rejection, we are looking at the double bottom, and it's coming back down to test support. We've got our trend line here as well. So it's done what we wanted it to do. It's gone up on the 50% pullback, because we had come down quite hard. So it needed a relief rally. It needed some sort of correction. Went down hard. It's breathing in now, it's pulled back 50%, and we've curled over beautifully. So this tells us that potentially, if it breaks this area, we could be looking for the downside, and we could look for an entry point somewhere around 1830 area. So there we have a test, and we just allow it to play out hour by hour. And you can see it's quite heavily weighted. So this is telling us that potentially we could have the makings of a head and shoulders forming. So this being the left shoulder, this being the head, obviously, this being the right shoulder. But let's just see what it does here. Expect it to maybe react off this level, maybe push up again. But again, if it fails to push up and starts coming down, then we would start looking for our entry short. So there we have a move up, a lot of volatility. And so now, based on this price action and retesting that 50 area, we are starting to see the potential for downside, and it's also allowing us to look for a decent entry, because we've got some price action to play with. So what do we do? So if you haven't got in here, which would be your entry point off the 764 using the 764 strategy, that would be your first entry point here, and you'd be short by now, and also you would then have by now moved your stop loss to break even. In terms of first downside target, well, that's quite straightforward as well, because what we do is, once this move is done and we're saying that it's gone up, we will pull these fibs back. So like that. There we go. And then focus on this range. This is the new range that we're now playing in, that we're concerned with. This is what we're interested in. This is all that we're interested in. So let's just make sure that these are on there accurately. Yep. And also on there. That's good. And let's pull these across now, these fibs, extend them to the far right, and let's pay attention to what is actually going on. So 764 strategy has given us money to the upside. Now we're looking for the 764 to the downside. There's one possible entry, and our T1 would be down here to the 38.2 of this range. 38.2 of this range. This is the new range that we're interested in. Okay, so allow it to do its thing, and we're looking. If we haven't already gotten in here, we're looking for a break of that trend line. So after much messing around, it's finally broken. Okay, so at that point, because it's an hour by hour, you can see that very weak consolidation. It's tried gallantly to push up and retest that area. We're in off there anyway. We're looking at the new low, and we're always using our fibs. These fibs are dynamic, so we're always plotting our fibs to see how to get in, and we're looking for rejection. A nice head and shoulders now formed. Left shoulder, head, right shoulder, tapped to 61.8. Didn't manage to go any higher before breaking that trend line. So you saw the trend line was being used because you saw clear rejection here. Cushioned it perfectly, bounced off it. Brilliant. So now you know where to put your stop loss if you were looking to short as a next possible entry, which would be here. Let's plot this here like that. Would be looking at the break of the trend line. There's the close. That candle's closed. So we'd be looking for somewhere like here as an entry point. Our stop loss would then also just be tucked up behind. Our T1 is back down using the 764 strategy, and that's what we're ultimately looking for. So if you haven't got in here, then it will always give you, if you're patient, it will always give you another opportunity. Well, not always, but the chances are that it will give you another opportunity if you miss the first one. So if you were in here, the beautiful thing about this is you can just trail your stop loss, can't you? You can just drag this down and just keep going, to the downside, and you would do something like so entry profit taking would be at the 38.2 around 1828. So for me, I would always round it up, 1830 T1. My stop loss would be trailed down to that last swing high, which in this case is at around 1847. So we could trail our stop loss down now to 1847. And we would just drag everything down, really, just keep going to the downside like that, and just keep moving it, down, and just focusing on. So T1 stop loss is 47 as well. There we go, like that, and that would make for a first decent target around 1830. Okay, so let's just see that's if you got in at the first point where you're supposed to get in. So if you've missed that one, don't worry, you'll have another chance. Let's just get rid of these fibs. So again, the beautiful thing about this strategy, it isn't just one size fits all. It does present multiple opportunities to make money. So if you get in at the second wave, the second move, and we're in here of the break of that trend line as a confluence, and we're looking for first target 1830 area, again, that's our T1 done. And then we want to trail our stop loss, so we want to bring our stop loss to break even, especially when it does that and breaks. So this was a trade that we took as well last week, made good money to the downside, just shorten it. First downside target would be 1820, so around 1820 area, which is a 50%. Again, same principle as the way we went up, step by step. So T1, T2, T3, T4, but we don't like to call them T1, 2, 3, and 4. Depending where we get in, we want to have a T1. So in this case, from the 38, if you got in here even as a next possible entry point of a break of the 30 area, 38.2, which is also previous structure, then your T1 would be your 50%. And your T2 is always going to be your 764. Just so we're clear on that, the 764 is always going to be our our major go-to target, especially with the 764 strategy. That's why it's called the 764. And so that's, that's what we do. And, with regards to this, let's just get rid of that a minute, just so it's nice and clean. And let's trail our stop loss. And okay, so we're getting some movement here, bit of a wick rejection. That tells us to go short. On that rejection, when it breaks like that, when it goes up and then comes back down, that tells us to go short, and that's going to give us potential for a bigger, deeper move because it's made a retracement up. So what we can do on this example, what we can do here is all we need to do is trail our stop loss now, and so we can start locking in some profit. So we would look for the rejection of this area, and if it rejects, we'll bring our stop down and tuck it in just below that area. So this is how we do it, right? So then we're always looking for about 1802. That's nice round number. It's targeting the 1800s as well, so it's very appealing in terms of an area of interest. And if you guys recall, you're trading with me, I did call this, and I did say that this is what we were doing, and it was always like a no-brainer really. So our target to the downside is 1800 round number. Our stop loss is going to be 1830, and we just want to keep trading everything something like that. Let's have a look at this. 18. So it would look like that, wouldn't it? So that's what it would look like in terms of as we're trailing the stop loss. And the whole time we've made money, come down to here, T1, or there's your T1, or there's your T1, depending on whether you got in here or here. There's always multiple opportunities to get in. Again, here we've had this move up off this area, so you always want to look at how price reacts off a key fib. It's gone up and it has reacted, but it's failing to go up. Although it's pumped up, it looks like it's doing a liquidity grab. And then on that candle right there, that candle is the candle that tells you that it was going to go down. So at that point, again, if you'd missed out on getting in here, markets can be like that. They can give you more opportunities to get in. So what do? Right, well, we just keep trailing our stop loss. Just get in again if you haven't got in already. It gives you opportunities. And our target with the 764 strategy is simple. It's always going to be the first major target is T1 is going to be to the 764. Now in this case, beautiful really, because it cut through, and so then we start looking for the bigger picture. We start looking for the full retracement. So that could be our T1 if you got in here, T1. And then our T2 would be 1785. But in this case, because it's pushing down quite hard, we would be interested in 1765. And also, why are we looking for 1765? Because it's blown through the 764. So that's our 764 taking it up, taking it down, money's made. Now, in terms of this price action, this becomes a whole different ball game. This is our MT strategy helping it along to the downside, and now we'd be looking for divergence and a divergent strategy to keep going short down to there until such time that we get down to 1760, and we'd definitely be out of the trade. But see, you can also see why we start appreciate why we take profits, because it starts to get a little bit crazy, but we would have already made our money. And now again, we had a spike here, rejection, another spike, rejection, so you could bring your stop loss down again, just keep trailing that stop loss. And so where would that be? That would be about 1812, I think, the stop loss on this. So it would be something like that. And target then would be 1765, which again ties in with the divergence. And also we did say that, our downside target was down there because we've broken down. We always want to take some profit here as well, about 1785 as a 100% retracement. But ultimately we're looking for down there. Now, why are we looking for down there? Well, because if we look at the higher time frame, you can clearly see that the previous low was 1764. Now, if we go drill up again just slightly higher, and we understand exactly why that is an area of interest, well, because that area is based on this last swing here, which is the last swing low, last swing high. It's a 50% level, so 50% area. So again, it made for a perfect downside target, and with that momentum, you just kind of knew that it was going to go down there, because until it got down there, I was quite satisfied to keep shorting, and that's the beautiful thing about the strategies. So we had movement to the upside with the 764 strategy, it gave you entry points, and I gave you multiple entry points back down again. And then on top of that, we can add our divergence strategy, we can add our MT strategy to make the most and maximize this move to the downside. I hope you found that intuitive and helps explain, breaking down how we view price action using the fib levels as key levels for support and resistance as our first primary confluence. Thanks very much.